Usually, when we invest our money, we are looking for a few very specific signals. We look for a visionary CEO, a breakthrough consumer product, or a clear solution to a real-world problem. It hit a $9.5 billion valuation with no product, no CEO, turning $200 into nearly $2 million. That asset is Pepe. It began as an anonymous tribute to the iconic internet frog meme, originally drawn by artist Matt Fury in 2005. To understand how something like this exists, we have to look at how it is built. Pepe is what is known as an ERC20 token. This means it does not maintain its own independent network. Instead, it operates like a digital tenant, renting secure space on top of the already established Ethereum blockchain. This structure becomes interesting when you compare it to its closest rival, Shiba Inu. Shiba Inu actively tries to behave like a traditional tech company. They are building decentralized exchanges, secondary blockchain layers, and sprawling virtual reality platforms. By contrast, Pepe intentionally does absolutely nothing. It is a zero-tax token that stays purely minimal. There are no corporate roadmaps and no software ecosystems. For the millions of people trading it, that lack of utility is the core feature. It strips away all the corporate dressing to become pure, unfiltered community sentiment, showing us that internet culture can now function as an asset class of its own. But if there is no executive team managing the project, how does this digital asset actually function? The answer lies in its tokenomics, which are simply the mathematical rules baked directly into its code. The math starts with a massive, intentionally humorous supply of over 420 trillion tokens. However, the crucial detail is that over 98% of those tokens are already circulating in the open market. Think of the launch process like placing funds into a heavily reinforced vault. When the token went live, 93.1% of the entire supply was sent to a public trading pool on Uniswap. The creators then permanently severed the administrative access required to ever move those funds again. Following that, the developer's administrative wallet was sent to a null address, removing central control. The remaining 6.9% was placed in a transparent, shared wallet, strictly reserved for future exchange listings. Because the code is open for anyone to inspect, we can see exactly how many people are participating. Today, there are over 552,000 individual holders, logging over 3.3 million transactions on the Ethereum network. By permanently deleting their own control mechanisms, the anonymous creators eliminated the risk of empty corporate promises. They left behind something that is mathematically secure and perfectly transparent. However, structural safety in the code does not protect you from human psychology. When driven by pure sentiment, the price action is incredibly volatile. This line chart visualizes that extreme volatility, showing a severe cliff drop from the token's peak down to a flat bottom. Today, it trades at just a fraction of a cent. That places it roughly 86% below its all-time high. For market watchers, the recovery path relies on specific psychological milestones. The first major hurdle sits at the 8 level, with a medium-term target resting higher at 15, should collective enthusiasm return. Without a parent company generating quarterly revenue to anchor its value, a meme token's price chart does not reflect business performance. It is a raw, real-time tracking metric of human emotion going viral. So let's weigh the reality of this project. On the positive side, it holds a top 45 global market cap, a fully circulating supply with zero pressure from locked insider wallets, and is listed on the world's largest trading platforms, including Binance and Coinbase. On the negative side, the team is completely anonymous. The digital asset has zero fundamental utility, and buyers have endured steep 86% price drops from peak valuations. Pepe functions as a highly calculated, structured bet on the internet itself. Because of that, it is vital to remember meme tokens are highly speculative, high-risk assets that can lose all of their value. You should always do your own thorough research before participating in these markets. If this breakdown helped you understand the mechanics behind the meme, hit that like button and subscribe for more hype-free analysis. And let me know in the comments below, do you think the frog is poised for a major comeback in 2026?